All right, everyone, let's go ahead and get started. Thank you very much for joining us for another edition of our educational webinar series. Today, we'll be covering the power of checkbook control IRAs with a specific emphasis on utilizing LLCs in this nature. While there are two different types of entities people can use, the most common type would be an LLC, and that's what we will spend the majority of our day today focused on. About myself, my name is Alex Perny. I've been with Advanta since 2012. If you have any direct questions regarding any of the information provided today, I can be reached directly at the number shown on the screen. For those of you just tuning into audio, that's 727-754-9954 or PERNY at advantaira.com. And if you would like a copy of the slides as a handout, they are attached right there onto this presentation right now. A bit of a disclaimer because we will be getting into some nuts and bolts of legal issues in this with regard to entity establishment for doing checkbook control. Advanta IRA and our employees do not provide investment advice, nor do we promote or endorse any investment products. All informational materials are used for educational purposes only, and all parties are encouraged to consult with their attorneys, accountants, and financial advisors before entering into any type of investment arrangement. With that said, a little bit about Advanta IRA. We're a self-directed retirement plan administrator serving clients nation and worldwide. We strive to provide excellent service, and hopefully by virtue of these educational webinars can bring you a little bit of extra education to help you make informed decisions regarding your investment structures. We have almost 20 years of industry experience, being founded back in 2004. We serve clients with just about 9,000 active accounts, and we have a little bit over 2.2, need to update that figure, $1 billion of assets under administration currently. So if there's something that you're looking to do, the likelihood that we have seen it is almost certain. So if you have any questions, feel free to reach out to us directly. We'll certainly try to get you helped out as best we can. So let's define a little bit about what we're talking about today. What is a self-directed IRA and what is checkbook control? Well, self-directed IRAs, and used in this context, are referring to anything, a retirement account that you're utilizing to invest in assets that are not on a tradable securities market. So whether that be real estate, notes and mortgages, private placements, precious metals, foreign currency, and the list goes on and on. That's what we're referring to when we talk about self-directed IRAs. Now they're, essentially self-directed IRA is a marketing term. It's not, there's no such thing when you look up the IRS to say, hey, I have a self-directed IRA versus a brokerage IRA. So sometimes people are a little bit confused and get the nomenclature a bit mixed up, but just understand when we're talking about self-directed IRAs, that's what we're referring to. It's just the utilization of a type of an account that allows you to do these types of alternative investments, with a specific emphasis today on doing checkbook control, whether that be through an LLC or a trust, choice ultimately being yours. But again, today we're going to be primarily focusing on the LLC aspect of a checkbook control structure. Now, people are often wondering why they haven't heard about a specific term, or they're wondering if this is something that's going to be legislated out in a new round of legislators when they come to power. Really, that's a very low probability of risk of happening. Your ability to do self-directed investments of any nature, so buying things like real estate, precious metals, private notes and mortgages, has been essentially available to investors since the 1970s, since 1975, in fact, with the passing of the ERISA block of legislation, which was the Employee Retirement Income Securities Act of 1974. So if you ever get that on a Jeopardy question, you'll know. But essentially, this type of investment structures has been reviewed and allowed by the IRS for a significant amount of time. And specific to checkbook control, this really kind of came to prominence in the mid 1990s. With a few different court cases that examined it. And since then, it has been looked at by the IRS in several different court cases and has resoundingly been approved, so long as that you're following some specific guidelines and not crossing any IRS thresholds for committing prohibited transactions, which we'll get into that a little bit later on in this presentation. And again, the reason why people haven't heard about this is that self-directed investments really only account for about 4% of total IRA investments in the US, and according to the most accurate figures that we have, the amount of retirement plan assets in the United States is roughly about $37 trillion. That's a number 37 with 4 commas and 12 zeros. So a really, really big number for a very small percentage of this, and just kind of goes to show, why this isn't exactly, a little bit more prominent. I see someone's asking about audio. Everything's showing fine on my end, so I'm not sure what might be a persistent issue on your end, but audio, everything is showing strong on the portal here. And then another person asked, will there be a replay of this? Yes, everything that we do on our webinar platform is posted to YouTube within about 24 hours of the end of the recording. So if not today, you'll be able to go back and reference this tomorrow. So moving on. Okay, so what choices do people have when it comes to checkbook control accounts? Now, it's, for whatever reason, I hear this a lot saying, oh, well, I have a traditional IRA or I need a Roth IRA. It's simply not the case. You can really checkbook control with any type of an account or a blend or mixture of many different types of accounts. And I'll get into why that may or may not be a good route for you to go, but you don't have to have, let's say, a Roth IRA. You don't have to have a traditional IRA. You can have really any type of retirement plan and utilize it in the construct of having checkbook control. Checkbook control really just referring to how you structure the investments underneath of a particular type of an account. The checkbook control nature of the account is agnostic to the type of account that you have. So something I do like to clear up, it does seem a little bit basic, but again, I like to make sure that we can clear up any misconceptions that might be out there when we do these types of presentations, because although you may not think it's a big deal, if someone else gets over that hurdle, I think it's definitely beneficial to look at. So traditional IRAs, those are the types of accounts that take in rollovers from other type of retirement plans, such as old 401ks, governmental 457s, your old pension plans, anything that's pre-tax gets dumped into a traditional IRA. And those, again, can certainly be used in a self-directed fashion and furthermore into a checkbook control mechanism as well. And again, the same kind of concept holds true for any of these. If you have a Roth IRA, a simple IRA, a SEP IRA, covered L, ESA, and HSA, or even a solo 401k, can all be utilized in checkbook control fashion. Now, something we're not going to really get into too much here is that solo 401ks have the added additional benefit of not necessarily needing a additional entity for you to gain checkbook control, which goes back to the custodial nature and regulation of IRA accounts, that you cannot directly have, quote, checkbook access to an IRA account, meaning that the assets have to be held in some type of custody with a custodian. So removing you once removing you from the actual administration of the funds. But the interesting mechanism of the IRA and checkbook control is that the IRA owning an entity that the client can then in turn administer, the IRS does not have an issue with. So again, it is kind of an interesting way to look at it, because you're ultimately getting that control where the IRS says you can't have it initially. But again, the IRS has examined this in several different court cases, and we'll go through a few of those here a little bit later on to show you exactly what issues they took when these were getting examined, what issues that the clients might have actually ended up having, and if they did get in trouble or that they didn't get in trouble and actually won their court cases against the IRS as well. But suffice to say, what I'm trying to get across with this slide is just the fact that you have options. Just because you have one particular type of an account does not mean that you inherently need to change, create a large tax liability for yourself in converting maybe from pre to post tax. Because again, one of the ones I hear a lot is that you have to have a Roth IRA in order to do checkbook control, which is just inherently false. You don't have to have that. But the other thing I do like to bring up is the additional benefit. If you do have a solo 401k or you're looking to do one, you do have the ability to do checkbook control in a little bit of a more direct manner than having to set up an additional entity just to obtain that type of checkbook control. And again, remember, please ask questions if you have anything that you'd like a little bit of additional clarification on, or something that you'd like answered anytime throughout the presentation. There's no such thing as a bad time to ask it. Let's see, we do have a good timing. Let's see, Alan asks, if I currently own real estate in an LLC inside another self-directed IRA, how do I transfer the account to a checkbook IRA with Advanta? Well, in this instance, the individual has, and chime in if I'm wrong when I'm explaining this to everyone listening, you currently have an IRA with another custodian that is owned through an LLC. So that other account external from us owns the LLC that the property is held by. So with that said, there really isn't a whole lot that needs to be done on the side of the property. What needs to be done is that there's an assignment done of the LLC membership. So the other custodian would assign the membership of that LLC to the new Advanta account, and then we would take over administration of the account. That's one nice thing with regard to transferring properties or moving custodians if they're in an LLC is that the titling of the ownership does not need to change of the underlying property. It makes things a little bit easier if you ever need to change custodians, or even if you want to sell the property and maybe you just like to sell the LLC rather than the property. It definitely opens up a lot of opportunity there for a little bit more creative deal making on behalf of the IRA client when it comes to transacting their real property. So that again answers that question right there. And then another question we got a few will answer. So just to clarify, I may not need an LLC to have checkbook control of a solo 401k. That's absolutely correct. I would encourage you, if you're interested in doing a solo 401k, to maybe have a one-on-one conversation with me so we can dig into that a little bit more. I don't want to completely rabbit hole that, because that's kind of a whole other complete presentation that I do on solo 401ks and attaining checkbook control without having an LLC. But the very high level 30,000 foot view of that is that because you can act as the trustee of a 401k, and there's again some fiduciary regulations with regard to the IRS, they do allow for you to have direct checkbook control access in a 401k scenario as opposed to an IRA. So you don't need that secondary entity only for 401k accounts. Any type of IRA, so traditional Roth, SEP IRA, HSA, ESA, or simple, you do have to have some type of entity mainly focused on the LLCs, but you can use a trust, but you can't act as the trustee of your own IRA-owned trust. So most people elect to go with an IRA-owned LLC because you are allowed to act as the manager. So, again, that is kind of the answer to that question. And will you be covering multi-member LLCs? Russ, maybe type in a little bit more of a specific question that you have, because I kind of cover it tangentially, but if you want to drill down a little bit more. And Benjamin asked, what is a checkbook control account? I think that's a great way to segue into the next slide, but thank you all for asking these great questions. So what is self-direct, or what is a checkbook control account? So before we get to that specific question, how do you move funds between accounts? It is inherently very easy. Once you've established an IRA with a custodian, namely Advanta in this case, it's just a matter of us reaching out to your other custodian if it's an IRA to pull the funds over, or if you have a 401k or an employer plan, for you to direct them to roll the funds directly to us. There's no tax consequence. In most cases, there's not even any IRS tax reporting done on the movement of those funds, but there's certainly no penalty or anything else for the movement of funds between retirement plans. So what is checkbook control and why do people choose to do it? Checkbook control inherently is this. It is the formation of a new entity that the IRA would own. So in the case for this, it's going to be a newly formed LLC that will allow for the LLC to become the primary asset of the IRA. So the IRA becomes the primary shareholder member of the LLC, and then the client gains the ability to act as the manager of the LLC and sign checks, engage in dealings with the LLC to purchase assets, sell assets, engage in things like auctions for property, for tax deeds, cryptocurrency, buying real estate directly, all without having to directly involve the IRA custodian in those actual dealings. It is simply the structuring of an investment which allows the client to obtain direct checkbook access to the IRA funds in a compliant manner. So essentially that is the best way that I can answer that question of, what is a checkbook control account? Is there an interest rate on the IRA? That's kind of a dependent question on where the funds actually are being stored. At Advanta, we don't offer any directed type of interest-bearing account. One reason that some people might want to use checkbook control because they can utilize banking at any number of different financial institutions, but most people don't hold cash with Advanta anyways. There's no appreciable benefit to not having the funds invested. So indeed. The questions are not put up for everyone to see because it does include people's full names for privacy reasons. Let's see. Okay, good question. Then we will continue on. My other IRA administrator currently files IRS required filings like year-end evaluation of the real estate in the account with checkbook control IRA. Would Advanta file the IRS filings, or is the owner of the IRA required to complete their own filings? So Alan, essentially, we still take care of the IRS required reporting, which is called your 5498. You're still required to report back to us a value, but on the LLC side, instead of just reporting back the actual holdings, like, let's say you had 2 properties and then cash in the account, what we need is a value of the LLC. So an unaudited balance sheet is really what we're looking for in the checkbook control style. So you would provide us with, if you're used to this, you could provide us with a comps for each property or a property tax bill that shows an applicable fair, marketable value, along with a copy of your cash account for the LLC as of 12/31. We in turn compile that and do all of the IRS required reporting for the IRA, just as we do if you didn't have a checkbook control LLC, or just as if you had owned the properties directly. So the reporting requirements are just a little bit different for the client, not necessarily any more burdensome, but just a little bit different, but we would still take care of the IRS reporting. All right, so let's keep pushing on. I see a few more questions popping in. Keep those rolling in, and again, I will check those off as they come through. So why do people choose to use checkbook control? Well, the various reasons are not going to be the same for every single person. They could be as different as night and day or black and white from each person, not to say that one person is inherently right or wrong. And I always encourage clients, understand the cost and the benefits to what you're doing. Just because checkbook control might seem attractive by saying, oh, hey, I don't have to call my custodian to get something done every time. I don't have to wait on checks. I can do things all on my own. While yes, those may be some perceived benefits, to get there, you definitely have some opportunity cost that's associated with it. But why do people choose to do it? It can offer clients with the ability to write checks at their discretion from the IRA. So if you're an investor that likes to go to, let's say we have a lot of clients that attend RIA meetings. Those aren't held during normal hours. And if you want to sign a contract and do deals at 8 o'clock at night or 8 in the morning, you can certainly do those at much greater ease than if you had with the IRA. Well, not with the IRA as opposed to not using checkbook control. Not to say that during normal business hours, we can't immediately process something and get it done for you. It's just a matter of your own personal preference. Sometimes you do have the ability to reduce your fees depending on the amount of transactions you are doing and how quickly you are doing them. You may see a reduction in fees from your IRA. So to illustrate this a little better, I have 2 examples. So the initial setup of the IRA initial setup of a checkbook control LLC is not out without costs external from Advanta. So you'd have the initial startup costs with doing everything from Advanta, that'd be 1 block of fees. Now, to have the checkbook control LLC done, you have some external fees as well. One, the registration with the particular state that you're registering in, which could probably be anywhere from like 120 to, sky's the limit if you want to go with a state that charges, an exorbitant amount like California or New York. But cheaper states are probably going to be on the order of $120 to maybe $180 a year. So you have that additional fee. You have the initial upfront cost of setting up your LLC, which is going to be consistent of your operating agreement, filing your articles, getting a tax ID number. Now you could reduce that cost by trying to do as much of that yourself. Most people like to go with a service provider to do it for them. So factor in another couple $100, probably about $300 to $500 for the LLC establishment. So the initial upfront costs, depending on how many transactions you're looking to do, may or may not be a cost savings, and depending on what you're actually investing in, may or may not be a perceived operational benefit as well. But just understand, that's not to discount your personal preference. That should also factor into your decision making on this. Just because it is a more upfront cost, if you really want to do it and it makes you more comfortable and you think you'll be more successful with it, then that's money well spent as well. But just goes to show that just because you have the potential to reduce fees doesn't necessarily mean that the other external fees from Advanta aren't going to be kind of making up that difference as well in the fee reduction possibility with this. And you also have greater flexibility. You do have greater flexibility than with the IRA custodian directly. There really isn't any other type of alternative scenario that I would pose there. You are able to invest in a greater variety of investments than you would if you went directly with the custodian for your investments, namely things that have to do with auctions or like point of sale brokerage, so futures and Forex, cryptocurrency, tax deeds or tax certificate auctions. Those 3 main places are where people see a lot of benefit to doing this. And also people that like to wholesale real estate typically can see a good benefit from doing things in a checkbook control IRA, IRA owned LLC scenario. Again, not to say someone that's doing a typical piece of residential real estate couldn't see a benefit from it, But I just like to make sure people maybe understand to have the question with us before kind of immediately deciding to go with one route versus the other. There's costs and there's benefits to everything. Okay, let's answer a few questions. Russ asks, I have both a traditional and a Roth plus my own real estate LLC. Would it be easier to write one check versus... Okay, I have a traditional and Roth plus my own real estate LLC. It would be easier to write one check versus 3 to contractors for rehabs. Yeah, certainly. Depending on exactly what you mean by that, yes and no. There's a few different routes that could go. Robert asks, could one use a trust instead of an LLC? Yes, you can use a trust instead of an LLC, but here's where most people elect to go with the LLC rather than a trust. You are prohibited from acting as a fiduciary to your IRA. So a trustee of a trust is classified as a fiduciary, meaning legally that they are obligated to act in the best interest of the party that they represent. You are disqualified from doing that with an IRA. Now, a manager of an LLC does not meet that same litmus test as a trustee does, so they are not qualified as a fiduciary to the LLC and by turn the IRA. So that's why you are allowed to act as the LLC manager as opposed to the trustee of a trust. So while you can achieve checkbook control through a trust, you cannot act as the trustee and sign the check. So just as with the IRA custodian directly holding assets for your IRA, having to go to someone else to write a check, you essentially would be setting up this additional entity for you to still have to go to another non-disqualified third party to have checks written, contracts signed, and everything like that. So while, quote, yes, you could have a trust do the checkbook control for you, most people don't want to go that route. I certainly do have a handful of clients that elect to go the route with the trustee. They feel it offers X, Y, or Z benefit. But again, I'm not here to say one is better than the other, just that the main goal for a lot of people is not conducive to using a trust when it comes to checkbook control with a retirement plan. Are appraisals required for real estate inside a self-directed IRA need to be completed and determined property values for the IRS? No, you can, so long as you don't have an RMD or a taxable event, you don't have to get a certified appraisal. It just has to be some type of third party. Let's see. And we'll answer 2 more and get moving on. Are personally paid expenses, expenses paid personally or external fees for LLC startup reimbursed from IRA LLC funds? Ideally, the IRA needs to be paying for all of the setup costs for the LLC. So most people that do this service that are familiar with IRAs will allow for the services to be paid for an invoice after the IRA is set up, because it is an expense directly related to an IRA owned asset and needs to be borne from the IRA. You could not be reimbursed for that afterwards from the IRA. And will my operating agreement with my current administrator be transferred with my LLC that moves from another custodian to the administrator? Yeah, nothing really changes with that initial operating agreement. It's just a membership assignment if you're transferring custodial ownership of an asset. All right. Let's keep moving on. Okay, so what are some inherent differences of checkbook control versus using a custodian directly? So if you have a custodial or administrator account, the administrator retains the uninvested cash and pays bill at the direction of the client. Meaning that, let's say you owned a piece of property. So 123 Main Street is owned by your IRA and it needs a new water heater. You get the plumber to go out, assess what actually needs to be done. They give you an invoice for the work. We can either have them paid directly once the work is finished, or we can mail you a check beforehand. You can put in that request online. Everything is done within 24 hours. So it's not inherently cumbersome to actually have it done, but there would be a little bit of a delay. It's not an immediate type of payment that needs to be done. And again, we don't charge for that service. So you submit the request online and it's immediately paid to that person. The administrator receives all deposit and income and cash to the account. So if there's a rental income, the Advanta in that case would actually be taking in that rental income, depositing it, doing the record keeping copies of checks, deposits, all that kind of stuff that you ultimately be responsible for in checkbook control. So in checkbook control, since the IRA owns the LLC and the LLC is operating any and all investment, the client personally obtains control over the cash that the IRA has using a third-party bank account, and then the client is able to issue payments directly out of the account, and then the LLC receives deposits and income into that third-party bank account. But keep in mind, there's the transference of responsibility of record keeping in that case. So Advanta in this scenario would not be taking in any type of direct deposits from, let's say, the renters or anything else, or we would also not be paying any bills and doing the record keeping on that front. So the client is now responsible for all that. So while you do gain tighter control, you do have the ability to reduce your fees, you also do reduce the level of service. And I want to make sure I'm very clear on that. You reduce the amount of interaction with the custodian, but that also reduces the amount of record keeping and secondary eyes that are on all of your transactions, which could be good and bad. So the pros and cons between these two are that if you have checkbook control, you have quick access to IRA funds for auctions, you hold more assets with lower fees. Some states do offer additional liability protection when using LLCs, but you always need to check with an attorney familiar with your state's LLC laws, because not all states treat single member LLCs the same as they do multi-member partnerships. Now, when you have just one IRA owning an LLC, they may not necessarily treat that as having the same liability protections as a multi-member partnership. And if there were to be some type of liable action or some creditor action, it could potentially attach back to other assets of the IRA or the LLC itself. So just be careful with it. Just because it's called a limited liability company does not mean that it's going to limit the liability of the IRA in a particular scenario. Always, always, always check with professionals that can, accurately provide you with good information. It's easier to make investments with partners with LLCs. That is, very easy to kind of look at. You can get to engage the LLC and really any type of partnership agreement that you can come up with, so long as it's non-prohibitive. And then you can also hold a multitude of different types of assets within these accounts. You don't have to necessarily just do one type of asset per LLC. You have the ability to blend a lot of different asset classes within the LLC, and potentially also have the additional benefit of having a brokerage underneath of the self-directed IRA, which is not a service we directly offer at Advanta. We're not a broker dealer. So if you had, uninvested cash, and I know someone asked about earnings, like interest on uninvested cash within an IRA. Well, we don't offer any. If you went with a checkbook control model, you would be able to, earn interest, drop things into a brokerage, and have things like T-bills or other types of more, interest bearing, if you will, or performing traditional assets underneath the arm of the IRA. So again, those are definitely some of the pros. The cons, and this is really something I like to encourage people not to overlook, is that you're responsible for keeping all records for your IRA at this point. If you pull up your IRA account statement here at Advanta, it's just going to show the LLC as the asset of record. Any and all expenses that are paid from the LLC, any of the compliance issues, all of the checks written are all the responsibility as you, as the manager of that LLC, to keep and retain. So, if your, handbag or your wallet looks like a war zone of receipts that you never file and collate, having the added benefit of having the IRA be the administrator directly of it is probably money well spent to help keep you safe. But if you're someone that can write Excel macros in their sleep, or is very good with bookkeeping and record keeping, then absolutely, that type of additional responsibility of doing it for your IRA is probably not going to be a problem. But I encourage people to be realistic with yourselves about how well you can retain and keep records, because at the end of the day, all else forbidding that there is some type of issue and you have to explain this in front of the IRS, the more detailed you can be with all of your records and the custody of your records, if you're acting as the manager of the LLC, the better. So just keep that in mind, and let's have a realistic approach as to how well you think you can maintain the records. Also, with regard to prohibited transactions, you have a lack of oversight as the IRA administrator from being able to look at the transactions to make sure there's not going to be a particular issue. And I'll give you an example here in a minute. Then that is also easier to engage in prohibited transactions, and additional capital calls or additional capital contributions could be problematic if there are additional partners. So here's the example of where you can see maybe that there would be an issue by not using checkbook control by not. I had a client back when I was still doing investments for clients directly that wanted to buy a piece of property in Auburn, Alabama. Now, what's in Auburn but a humongous university, the University of Auburn? So he decided to buy the property, and we start going through everything, close on the property. He's going to rent it out to college students. Seems like a relatively sound investment. Whether or not you want to, rent to college kids is an argument for another day. But, he decided that was the route he wanted to go, close on the property. about a month or two later, it's coming up on September, August, and he sends over a lease agreement for us to sign. And lo and behold, someone with the same last name as him is on the lease. So I asked him, I said, hey, who is this person? He said, oh, it's my daughter. She's going to be going to Auburn. He had no intentions of committing a prohibited transaction, but I explained to him that, prohibited individuals can't utilize an IRA owned asset. And, he's like, oh, this is going to be a hard conversation to have with my daughter. But it goes to show that he wasn't trying to do anything prohibited by any stretch of the means. It was just, an innocent enough mistake. He didn't understand the rules well enough. But if he had had a Checkbook Control LLC, we would never have caught that, and maybe the IRS wouldn't have either, but he would have definitely rented that property to his daughter and her friends and could have potentially gotten into a big heap of trouble with the IRS had he not been using Checkbook Control. So it goes to illustrate that understanding the rules front and back and asking a lot of questions on the front end before doing Checkbook Control is a very, very wise way of doing things to make sure that you're not going to run afoul of any IRS rules, because once the funds are in the LLC, you're the one that's writing the check, and you can just as soon as write a check as commit a prohibited transaction and have to deal with the IRS, which is not something I think a lot of people would like to do. All right, we've got a few questions that rolled in. Can you personally purchase a property from your own self-directed IRA? No, you cannot. When I act as the manager of my IRA-owned LLC, how am I limited and how do I avoid providing services to my IRA? That's a tough one to kind of define, because what exactly is a service? I tell people when it comes to actually doing the work on a property, that's easy enough. If you own real estate. So if you own a piece of real estate, don't, when it comes down to it, don't change a lock, don't paint the front door, don't mow the grass, treat that property as if it was on the other side of the country from you. We're here in Tampa, Florida, treat it like it's in Seattle, even if it's next door. Just be very careful with it. What exactly is a service? It depends on who you ask and what time of day and, which way the wind's blowing is what you consider a service. But, the farther removed you can be from it, the better. With that said, there is a bit of a floating point to that insofar as saying, hey, if I'm coordinating all the actions of, the property, if I'm making sure that, I qualify the tenants, I'm making sure that the, everything is signed correctly. Is that a service? Well, is researching stocks and executing option contracts within an IRA on a brokerage a service? The argument can be made that neither are, but the argument can be made that both are. The IRS has looked at this and, they generally accept that investing in real estate through an IRA and through an IRA-owned LLC is acceptable, but they also do have some limitations on, what they do have umbrage with, and we'll get into that in a few minutes. Can you have different checkbook LLCs for different assets that you want to keep your investments in? Yeah, sure, if you want to, but just keep in mind that's going to increase your cost basis just in your doc prep for having multiple LLCs and multiple state filing charges. So you could certainly have things split up into multiple LLCs to bucket things accordingly, but you just have to look at what your cost benefit is at that point. How much money are you going to be shelling out in annual state registration fees, additional operating agreements? Is that worth it to you? If it is, go for it. If not, then just keep in mind that you do have, some thinking to do as to, what's going to be the most, beneficial method for you to go with. Pros and cons of buying through an IRA directly. It's easier to keep arm's length from IRA funds. So again, making sure that you don't cross any proverbial lines with the IRS is definitely a little bit easier when you have the IRA directly involved. You're less likely to commit prohibited transactions. Again, the example of the gentleman with the property in Auburn, easy enough for us to catch, probably a little bit harder if he had already gone down that road with an LLC. You also have clear records of all of your IRA activity. Cons, you do have some additional administrative overhead potentially, and you don't have the ability to write checks for immediate purchases. Oop, go back. So who can IRAs and IRA-owned LLCs deal with and not directly deal with? Essentially, here are the people you have to be very careful with. You cannot directly transact or have them utilize an IRA-owned property. Or asset for any manner, or use them as a service provider. So let's say your IRA owns a piece of real estate and your dad owns a landscaping company, or your son is an interior decorator. You could not have them do the work on your IRA owned property. Conversely, you could not transact with them directly either. So buying anything to or from any of these people or yourself personally or an entity owned or controlled by you is prohibited. I say when it comes to dealing with direct nuclear family, so mother, father, son, daughter, spouse, yourself, or anyone directly up and down from you in your family tree, it's typically best to avoid it if possible. If not, keep in mind that you do have to do things as a partnership, and that's also where checkbook control LLCs can come as an additional benefit, is that if you want to partner with one of these people, you can do it a little bit easier if you do it with an LLC, meaning that the two parties come together, form a new LLC that they both partner on and can combine funds in that manner. Keep in mind at that point, you are going to be going into the realm of having a multi-member partnership, which does have additional IRS reporting requirements, which may be a little bit more cumbersome than what most people want to get into. But you can have multi-member partnerships or multi-beneficiary trusts that accomplish partnerships and help to kind of blend additional capital together if you're looking at disqualified individuals and partnerships. If you're not using disqualified individuals, again, LLCs offer a great variety of ease, or offer a great amount of ease when it comes to utilizing funds from a bunch of different sources to invest in a singular asset. So again, just want to illustrate whom you can and cannot deal with, and this does extend to entities owned or controlled by these individuals as well. Now, so you got a few questions and then we'll move on. Is it okay to buy and hold fixing flips in the same LLC? Absolutely. Stepkids, if you are currently married to them, then most likely they are named as a direct beneficiary of your household estate, then yes. So I would avoid them. Is my girlfriend, partner, disqualified person? This is an interesting question. So I'll answer one question, then I'll go back to the girlfriend or partner. So please clarify, siblings are not disqualified persons. No, they are not. The IRS does not have an issue with siblings. This reason why I didn't put them in there, and glad you caught that. No, there is not an issue with them. Is my girlfriend, partner, disqualified person? No, they are not, but they could be. So let's say you invest with your girlfriend, you buy something from them, you have some type of partner, let's say something happens where you're engaging on a financial transaction basis. You've lent them money or something, you have a transactional across the closing table type relationship with them financially. Well, what if things go well and you and your partner decide to get married one day? Well, the day before the wedding, none of those transactions were disqualified. But if they're still in existence and haven't been paid out or haven't finalized, like come to fruition and paid out, the day after your wedding, they are prohibited. So you need to be careful when it comes to dealing financially with people like that in an IRA, is that, while they may not be prohibited initially, they certainly can become prohibited. And I have seen that happen. And it's not an easy thing to unwind, especially if there may be more long-term, higher capital investments. Definitely gets to be a little bit sticky. But again, moving on. Self-directed IRA rules. If you have an IRA owned LLC, you can't buy a life insurance policy, you can't buy collectibles. Some coins are allowed, but again, you just need to understand, all the basic prohibited transaction rules still apply when it comes to IRA owned assets within an LLC. So you just, again, need to follow Internal Revenue Code 4975. If you have any additional questions, reach out to me directly. I'm always happy to answer those questions. So checkbook control IRA LLC rules. Has to be manager managed. It can include more than just an IRA, but ownership percentages are based on the amount of capital contributions. So if your IRA adds in $10,000 to $100,000 initial capital contribution of an LLC, it gets 10%. It cannot get 50, 30, 40, 100. It gets what it gets from the amount of capital as the ratio on the initial capital contribution. If more than one owner, you cannot change percentages if it is amongst disqualified persons. So remember, you can partner IRA with disqualified individuals, but those percentages of interest cannot change. And it definitely is something that you have to have a lot of forethought and planning, especially if it's something that's going to require more capital, like a rehab project, or something that has additional capital calls, like some type of, what's the word I'm looking for, syndication that might have additional capital requirements. So just keep that in mind, that there, is some additional overhead there. there's no tax return required if it is a single member LLC. If you are in a multi-member LLC, you do have to file a federal notice of return with the IRS. If you have more than one member, it gets out of what's called a disregarded entity for tax reporting purposes, and you do have to file a federal return. That is not something that Advanta does. You would have to be familiar with that or have a CPA do it for you. So keep in mind that the simplicity that most people associate with checkbook control does get a bit muddied if you have a multi-member LLC, because a lot of people aren't going to tell you that you do have to file a federal return. Now, is there any tax due on that? Probably not. If it's all owned by, IRAs and tax exempt entities, you're probably not going to have any tax liability due. Again, I'm not a tax preparer. I'm not a tax expert in that field. I always defer and make sure I give a good amount of leeway in my answer to that. But just keep in mind, you do have to file that return, and that could be seen as an additional expense or overhead that you have to have another third party involved in. So what is needed in the forming of a checkbook control LLC? Well, there's certainly several different parts, and these are not things that Advanta does directly for people. You would need to have a qualified third party step in, or you could try to do it yourself if you found the need to do so. Let's see, have a question. Are my wife and I considered the single owner of the LLC? No, the IRA is considered the single owner of the LLC. Between your wife and yourself, the IRA is always going to be individually owned. So if Jane Smith has an IRA, then their spouse is not, technically an owner of it, even if they're legally married. It's just the IRA that owns it. The IRA is a separate entity from in and of yourself, just as I am a separate entity from anyone on this call. The IRA is going to be separate from yourself as a person. The IRA owns the LLC, and the LLC owns the assets. I know that's a bit of a kind of very dry textbook answer, but it's important to illustrate that there is this separation from yourself and the assets, and it's not necessarily kind of a marital asset. It's the IRA is the actual titled owner of it. And let me go back real quick, and then because we're going to kind of go through the next few bits a little bit quicker. There is several pieces of case law that support the checkbook control LLC. The first one that people like to point to is Swanson v. Commissioner around '96, and this one kind of established the issue of, well, you can't self-deal with an IRA, but since the shares were newly issued, no one had previously owned them, it could not have been self-dealing of a personally owned asset to the LLC, so the IRS didn't have an issue with it. The problem is, I think, in the Swanson case is that he turned around and sued the IRS for his legal fees and won, so I think he might have been painting a little bit of a target on his back. Now, the other one, there's two more. I need to add in an additional one here. The tax court memo of T.L. Ellis, of I think this is 2013, the IRS was examining a checkbook control LLC structure for the fact that the manager was providing service and getting compensated for it, and they did take issue with it because he was paying himself a salary for his quote service as the manager. They didn't have an issue with the structure or the fact that he was acting as the manager of the LLC. They deemed it to be a disqualified transaction because he was paying himself a salary for acting as the manager of the LLC. So that's where they had issue with that case as well. But again, he did lose that case, but they kind of, again, reaffirmed that the structure of the LLC was okay. And then one of the more recent cases where they've actually done a whole webinar on the particular issues with it of why you need to have certain assets need to have a little bit more scrutiny was the Swanson v. Commissioner case that came out maybe about 18 months ago was the final ruling on that. And the IRS, again, did not have an issue with the IRA-owned LLCs. It was actually a multi-member LLC with a husband and wife, IRAs both owning portional membership of the LLC. The issue they had was that they had bought precious metals and stored them in their vault at their house, having direct unfettered access to the IRA-owned assets, the tangible real assets. So, again, the IRS has looked at this, the structures they don't have an issue with, but they do sometimes have an issue with the way that people go about things. So it's important to ask questions, get real professional advice and insight on what you're doing before you kind of make a decision that could have very long-lasting impacts. Now, for those of you that are familiar, I'm going to kind of go through the general overview of what it means to have an LLC, because for the context of what we're doing, most people think, oh, I can go to my state's division of corporations, just open an LLC and then tell Advanta to send funds somewhere. It's not that simple. It is more involved than that, and it's important to understand why it's more involved than that and what the steps are. So there needs to be a filing of articles of organization. This is where you essentially tell the state that you want to have the LLC in. Hey, I'd like to have an LLC. They'll have kind of a general online application which you use all of your personal information to verify and say, hey, yep, I'd like to have Sunshine LLC. I'm just using a fictitious name, registered in that state. Initial filing fees are going to vary, maybe $40 to $500. Most of them you can do online, but sometimes you may also need to snail mail something. You're also going to need to obtain a tax ID number. Now, this is done via the IRS's website, or you can do the paper form SS4 to apply for a tax ID for the LLC. Now, again, these are all actions that are either done by the client or done by a service provider, such as an attorney or a CPA setting up the LLC for your IRA. Now, this is where you essentially get the other step of the other piece of the puzzle in which you need to open the bank account for the LLC. Now, again, these three steps, the filing of the articles, obtaining the tax ID, and the bank account, are what most people think of when it says, oh, I just need to open up a new LLC and be able to have a bank account. And while that is true, there's another step in this puzzle that needs to be done, which is an operating agreement. Going to your state and filing your articles does not inherently provide you with an operating agreement. So you need to understand there's an additional step that needs to be done, but filing your articles and obtaining the tax ID from the IRS will allow you to go to your bank and open up a bank account in the name of, let's say, Sunshine LLC. So your filing of articles, most states require that LLC or LC appear in the title of the LLC. You don't want to have Advanta or anything to do with your IRA in the name of the LLC. Not to say that it's like illegal to do it, it's just going to cause you big headaches if you have like our corporate name in there, since we are an LLC. Just making sure that you properly name it whatever you like. I've seen some incredibly interesting names, and some of them so unique that I would love to share with you, but people would know exactly who I'm talking about if I said it. You're able to name these things really whatever you'd like to. You do need to have a registered agent, essentially a person in the state in which you live that is required for notifications. If there are any legal notifications, they have to be physically located in that state. Sometimes there are services you can use, but other times if you are residing in the state with the LLC, you could name the manager as the registered agent, and the articles must name the manager. So essentially the IRA owned LLC, it's not going to be a managing member, the LLC is not going to be the manager. It has to be you as the client directly. So the articles naming you as the manager, the tax ID, and are what allow you to go into a particular bank and open up a bank account for the LLC. Can the registered agent be a family member? Potentially, but again, I always caution people when it comes to using family. I would ask a CPA or an attorney how they feel about that, because it gets into, are they providing a service by being the registered agent in a particular state? It's not a question I would feel comfortable saying yes or no. I would definitely refer you to either the attorney drafting the operating agreement or someone that's better qualified to answer that than me, to give you a definitive answer on a family member being the registered agent. Yeah, acting as the manager of the LLC, most clients that, so long as they reside in the state, just act as their own registered agent for notifications of for the LLC. Filing for the tax ID number, it is really easy. I won't get too far in the weeds of this because I know we are running out of time here, but essentially the IRS or the IRA, the LLC, a lot of acronyms today, the LLC has to have a tax ID number for one, it to be identified by the bank that it's opening up the bank account with, for any tax filings that it need to do, and any transactions that it's involved in. If it sells real estate and receives stuff in, got to have a tax ID. It's easy enough to do. You just need to go to the IRS's website and follow the prompts for doing a tax ID for an LLC. Again, you're using your name and personal address as the manager of this LLC, not Advanta's information, and then it'll spit out the electronically signed and filed SS4 for your ID for that tax ID application for the LLC. Helpful hints for opening up the bank account for the LLC: have your identification, make sure everything matches. The one thing I wouldn't recommend is taking a copy of an operating agreement to the bank. You don't necessarily need to have that. That's a secondary document that we really require in order to make sure that we detail the actual IRA as the owner of the LLC. That's not something you need to take. Basically, walk in the bank with your articles of organization, a copy of your SS4 tax ID application, a copy of your driver's license, so long as that the manager is you and it matches all those other other documents that you bring in, you should be fine. Just tell them that, hey, I need a LLC checking account opened, and make sure if they are going to provide you with any type of card access, like debit card, credit card, if you want that, it is imperatively important that it only be debit card only, meaning that if you need to buy something for $95 and there is $94.99 in your account, that it will decline the transaction, that there is no extension of credit to that account. So just make sure that's very important. If you want like debit card or card access to that account, that it is debit only with no overdraft protection and no line of credit being extended to you personally. Now, the operating agreement is the part of this that I mentioned that is not kind of included in what most people think of as needing to be done when opening up an LLC. And it's not, you are correct. If you just wanted to establish an LLC in the eyes of the state and the law, you don't have to have one. Should you have one? I would think so. It definitely helps with, having a properly established LLC, but you don't necessarily have to. And most people that have done LLCs in the past, for one reason or another, haven't. So this is the document that's going to detail a few different things. It is going to have to, at minimum, have the effective date of the agreement, so it has to be dated. It's going to need to name the members, which in this case would be the IRA or IRAs or other additional partners on additional schedules. So it has to name the people that own it. Has to name the managers, which would be the account owner. It's going to detail the limited liability of the members and the managers, how new members are admitted to the LLC, how managers can be removed. Basically, it details the operations of the LLC as a business. But this is what needs to be drafted and provided to us in order for us to fund an LLC that the IRA owns. And the same kind of functionality holds true for a trust. I know we really didn't cover trust today, but in doing this over the years, I think in the past 2 years, I haven't had a single person do a checkbook control trust. So I just kind of get out of covering it as much, just because you don't really get checkbook control with a trust. It's its own kind of thing. But the same kind of thing would hold true here if you wanted to use a trust, insofar that we need to be provided a trust agreement instead of an operating agreement. Now, how can this be done? Again, because remember, filing with the state does not provide you with an operating agreement, but there are different services out there. We can certainly provide you with a referral network of people that can help you draft an operating agreement. There are online providers like LegalZoom and others. There's no right or wrong operating agreement, so long as that it meets our minimum details of making sure that it's manager managed, correctly named to the IRA, and so long as you feel it satisfies the requirements for what you're trying to do. And again, here's some additional provisions that that the operating agreement may provide. Again, whomever you're getting to draft this document would be the best person to ask on what exact provisions may need to or not need to be provided in this type of legal document. Again, this is a legal document, so paying a couple $100 for a real service provider to do it is something I encourage everyone to do. Now, do clients get these from all sorts of different sources? Do they meet a varying standard? Absolutely. But I think it's kind of cheap insurance. It's a few $100 to save you from several, maybe thousands of dollars or tens of thousands of dollars in issues with the IRS if you ever were to have to sit in front of them and explain this. Yeah, I think it's good. Is the likelihood of the IRS looking at this very, 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 very low? The answer is also yes. So again, whichever way you want to go with it, just understand that there's a few basic requirements that we require, and we can certainly help you navigate that as well. So now, how are these things funded? And we're kind of rounding third, heading home on this. So if you do have any final questions, make sure you file those into the chat and I will get to them at the end of this. So what does it look like from start to finish for someone actually doing this type of investment? So Joe has $150K in a brokerage IRA, and he wants to invest in real estate, and he may want to purchase some properties at county auctions and other things. Let's say he also wants to do cryptocurrency. He wants to do a lot of different stuff, and he thinks that by the nature of engaging in property auction purchases and other things, he'd be better suited utilizing checkbook control. So he opens and funds an IRA here at Advanta, completes the IRA application, transfers IRA funds from over an IRA or a 401k. He gets his account number and everything set up in about 24 hours. Then, and this is important to understand in the order of operations, at that point, he can then start on the IRA LLC application process. He chooses the state to set up the LLC, chooses the name for the LLC. He gets everything done, and starts working towards getting that LLC done. Operating agreement, articles, tax ID application. He needs to get the bank account open because there has to be somewhere for the funds to land when we send them. Now he also has to have the operating agreement drafted. The IRA is listed as the 100% owner. The operating agreement must show the IRA as the member, and typically that's stated something like Advanta IRA, FBO, Joe Smith IRA, 123. We sign the operating agreement at that point, and then we issue a check or a wire to fund the LLC. And at that point, we're pretty much done with the transaction on our end. Then at that point, Joe gets to go and write checks out of that bank account, participate in auctions, invest in anything else that he sees fit underneath that LLC. And then any cash that's returned from the investments gets put back into the LLC, and then he's able to reinvest at his heart's content and doesn't have to involve Advanta in any further future transactions. With that said, I think we're finishing up, just right on the top of the hour. If you do have any questions, I'll stick around for a few more minutes to answer those. I want to thank everyone for joining with us today. Let's see. Let's see. Can I create a new Roth IRA with Advanta with cash to open the account? I think what you're referring to is, can I make a contribution to a new IRA and do an LLC through that route? Yeah, absolutely. There's nothing to say that you have to fund it with a rollover from another IRA. You can start with contributions if you'd like to. No problem. Let's see, what are the fees to start a checkbook self-directed Roth IRA? That'd be something I recommend you reach out to me directly. It's a lot of kind of variables on, like, are you looking to invest, like how much money are you looking to invest, and a few different things, because our fee schedule is kind of one or two different options, either the number of assets or the value of the account. And depending, I just like to be able to give you an accurate number. I'm more than happy to do that. Just give me a call or shoot me an email. All my contact information is right up there on the screen. Can you elaborate on UBIT taxes when investing in syndicated real estate development? I certainly can. It's a little bit of a more complicated answer than probably what I'm going to be able to give you here, with also addressing the other questions in here. But essentially, if you are invested in any type of investment that has underlying debt, so it's something that passes through that debt. So essentially, you're investing in something that's not shares of a C Corp that has underlying debt. Then in the case of a real estate syndication, which is most likely a limited partnership, and they have, let's say, debt leverage ratio of 70-30. So they, 30% down payment on the commercial property and 70% leverage. They're going to pass through that UBIT liability on K1 to any of the partners of that investment. Now, there are a few potential ways to shield yourself from that. One, or making sure you ask the general partners what their debt service pass-through is on K1 for any potential UDFI. Again, just asking them how much is going to pass through, and then also asking them how much of the depreciation, cost seg, and amortization also passes through on K1 to help you offset any of that. Because if you have less than $1,000 total liability at the end of the year, you don't even need to file. But more so to the point of, doing this, it doesn't matter if it's directly through an IRA or through an IRA-owned LLC. The potential is there if you're investing in debt leverage real estate syndications for a UDFI liability to pass through. I'd recommend going to our YouTube channel, and the most recent one I did on UBIT and UDFI explains that pretty well. And also I did a podcast on it on the Alternative Investing Advantage podcast that I host, explaining it as well. But suffice to say, if you're in an IRA, then yes, you do have the potential for the liability to pass through. The calculation's a little bit complicated, but again, I kind of go into detail on both of those platforms on how to deal with it. The one thing that I would say is that if that's of specific interest to you, seeing if you qualify for a solo 401k is a really big benefit in that regard, because it allows for you to be, 401ks are exempted from acquisition debt on real estate. So if the debt is new for the acquisition of that piece of real estate, 401ks are exempted from that tax. So seeing if you can qualify for that type of an account to do the investment with would offer you a very big benefit. So again, very long, more discussion-oriented answer. I'm happy to go into it if you want to give me a call and set up a consultation to go through it in more detail, but that's essentially the answer to it. Can my self-directed IRA take on non-recourse debt? Yes, it can. All debt for IRAs has to be non-recourse. All right, well, it looks like the questions are over. Again, thank you everyone for joining with us today. I always enjoy doing these. I hope it comes through and you enjoyed listening to me today. Have a great rest of your day, and we'll see you on the next webinar.